Welcome back to another Daily Brew. I'm your host, Trent. Today we're going to cover why the SEC just changed crypto forever. We're going to cover updated guidelines from the SEC about altcoin ETFs, and the outcome is more bullish than we ever thought. Also, we have rising fears of a US government shutdown. Let's dive into all of it together. In the meantime, smash that like button, subscribe to the channel to join the Brew Crew, the most hydrated crypto community on YouTube. Let's dive on into it. First up, Ellie Tourette tweeted out yesterday. She got her start as a crypto Washington, D.C. inside scoop reporter. She actually got her start covering the XRP case, SEC versus Ripple. And she's sort of made her career and her living now, carved out in this niche of being an inside reporter on all things intersection of crypto and Washington, D.C. So let's jump on into it. She posted yesterday on X, Scoop, the SEC has asked issuers of Litecoin, XRP, Solana, ADA, and Doge ETFs to withdraw their 19 B4 filings following the approval of the generic listing standards which replace the need for those filings. I'm told withdrawals could start happening as soon as this week. So that got people a little uncertain in the market. People started asking, what's this 19B4 section of the filings? You know, we have the Cardano ETF, shout out Cardano community. We have the Cardano ETF coming up, the deadline for the grayscale approval is coming up on October 7th, and people are wondering, is there some kind of wrench in the plans going on here? Why did the SEC tell the issuers of these 5 ETFs to withdraw these sections of their filings? Well, Ellie updated a little later in the day. She said, more context for those asking whether withdrawal is a bad thing. The short answer is no. The long answer, when the SEC approved the generic listing standards 2 weeks ago, it eliminated the need for exchanges to file 19B4 forms to list individual token ETFs, simplifying and speeding up the process. This move signals that the new process is working as intended. As long as these tokens meet the existing criteria, the SEC can approve a crypto ETF at any time with just an S1 filing. So even though the deadlines are looming for these individual ETFs, the SEC could technically make a decision on any or all of these at any time. So guys, the updated guidelines are more bullish than we could have ever thought for crypto. And the reason why is that under the new guidelines, instead of waiting 200 and upwards of 270 days that the SEC can delay a decision, these turnarounds are going to be much, much quicker, with a length of 70 days max, and it can be approved at literally any time. And, in theory, if there's already an SEC approval that the coin meets certain standards, the coin that's applying for ETFs, if it meets certain standards under the SEC, like futures trading volume under a regulated exchange, or presence on a regulated exchange for X number of years, then the issuer of that ETF can just simply proceed with the ETF exchange listing. Guys, this means that many more altcoins than I ever thought possible could actually be coming live here in the coming weeks and months and into 2026. And the reason why is that in the past, I thought, okay, there's no way this sort of stringent SEC approval process is going to allow for the passage of some dumb altcoins out there or some less prominent altcoins. But now, I mean, if the exchange presence is there and meets a very simple set of standards from the SEC, then the issuers can just go ahead and proceed. So, I think that we're going to be seeing the Cardano ETF sooner rather than later. That original date was October 7th for Grayscale. So we're awaiting that. And, guys, this is more bullish than ever before because it's opening the floodgates for altcoin ETFs. Now let's hop on over to a chart here with looming fears of a US government shutdown. And the one thing I want to point out is we've had two previous major government shutdowns while crypto was a major asset class, and also under the Trump administration. So these were in 2018. The most prominent one lasted about 35 days, starting December 22nd and running till about January 25th. So if I circle that on the chart here for you, that's about right here. Now, what I want you to notice about this is that Bitcoin, when this happened, it did not really deviate from the bottoming pattern that was already forming. So this is sort of comparable to the November 2022 Bitcoin bottom that we saw in the bear market, where FTX crashed and the worst imaginable news only managed to bring Bitcoin down another couple percent at the time, because the bottom had already been reached. The bottoming out pattern was forming. You see this nice rounded bottom formation here that went on to lead to Bitcoin recovering the 200-day moving average and going on to set higher highs and higher lows. Now, in January of 2018, we saw another major government shutdown. And this time, we have a shutdown coming in right about, let me get it right here, January 22nd or January 20th. And that was actually on a green candle. So it was in this period right here. And it was short-lived. And again, Bitcoin was not really doing anything other than what the charts were already telling you. Bitcoin had actually just peaked out and the bear market had just began. And Bitcoin was beginning to set a pattern of lower highs and lower lows. We had a high at the very peak of the 2017 bull run. And from that point, it went on to set a series of lower highs and lower lows. Right? Even the local bottom right here, the bounce set a lower high. So, guys, the moral of the story for me is we have to watch it one day at a time with the government shutdown. And this is a time, I believe, before the peak of a very massive Q4 bull move. This is a time right now when we're on the cusp of that we have to be on alert for shakeouts. for capitulation events. I don't believe that if they come, I don't believe that they will be very deep. I don't think that we're going to set lower lows unless it's on a wick. We do have a CME gap underneath us at $111,000, which is not very far away from where we are right now. And so, guys, this is a point where you have, the name of the game is risk management. Don't be over leveraged and manage your risk. Until next time, cheers.